All right, everybody, we've crossed my self-declared magic boundary of 10 attendees, so I think we'll still have quite a few more filtering in, but I'll get started. Welcome to this week's CarbonCurious, this month's, this quarter's, I forget exactly where we're at. Today we're going to be talking a little bit about the ETS market, but in particular, we've had a lot of questions over the recent months around what drives supply and demand factors within the market, and especially what is safe carbon, which is a term that's been around for a long time, but is being used slightly more recently and prompts a lot of questions. I'm Nick. Oh, what are we going through? So this is recorded. It's shared on our website after the session. We've muted your microphone and video. If you do want to ask any questions, use the Q&A function at the bottom bar. So there's a little thing that we can type in a question. We'll try and cover them at the end. And if we don't cover them live, we will try to follow up with an answer with the transcript on our blog. I'm Nick Butcher. I'm CarbonCrop CEO and co-founder, and this is probably especially relevant today, but the usual disclaimer. So none of this is advice, none of this is a forecast or a prediction. All of this may have errors, either in fact or in analysis. Really what we're trying to do with these is give you some sort of point you in a certain direction that might be worth exploring and doing your own analysis. You shouldn't treat this as the only source of information, especially not if you have a major decision that's hinging on the interpretation. We don't know what the ETS price is going to do, much as we're routinely asked what it's going to do. And we certainly can't provide any information on future policy or legislative changes beyond what's publicly available. So do not trade on this information. That said, what is happening to the carbon price is a pretty frequent question at the moment. And here's an extract from EMS TradePoint from last Friday. And you can see that what's happening is that it's trending pretty steadily down. With the most recent trading action today, it's sort of in those low 50s, so it's falling even further. There haven't really been any major obvious catalysts for this other than the failure of the auction on March 12th, so coming up a month ago, which did not clear at the $68 floor, which is unsurprising when you look at the price trends prior to that. Like $68 is up here somewhere. It was pretty clearly not going to clear. But there has been some sort of speculation as to what might be driving the changes, and there's a lot of volatility within the daily trading, which, among other things, suggests that people don't have a particularly strong opinion on what the price should be. Often what you see mentioned around carbon price falls at this time of year is that it's sort of a cash-strapped farmers and foresters have received the units because there's the emissions return period runs January to June, so over especially sort of February, March, April, May, people are increasingly getting the units in hand. And if they need money, then they'll be looking to sell those units, which means that there's an increase in the available supply. And the demand is often sort of playing the relatively longer term game in terms of procurement, because they tend to be larger entities and they may well be hedging a year or so in advance. I won't comment as to whether there's any particular truth or issues with this. I can certainly see why it would be the case. And as far as we're concerned, we receive carbon units each year, and we do tend to sell them more or less as we receive them for our own revenue and cash flow. And relatively new, at least in terms of me being aware of it, narrative is that the sort of speculation that there is more supply than was expected, and whether some forest owners might be selling beyond their quote unquote safe carbon, which might be a bit of a meaningless statement to you if you don't know what safe carbon is, and that's what we're going to try and unpack today. So yeah, welcome to More Than You Ever Wanted to Know About Supply, Demand and Safe Carbon. Looking at supply and demand to begin with in sort of a bulk aggregate view. So these charts are direct from the MFE website. I've shared them in the past. These are the most recently updated ones. On the left, you can see a summary of things that lead to supply in the ETS. So this is the auctions, the industrial allocations, forestry removals and other removals, which includes things like the destruction of high greenhouse emitting gases. I forget the exact names, but like I think fluorocarbons are one of them. So if you destroy those gases, you prevent them going to the atmosphere, you get some carbon credits. Something that's interesting to note here is that in the past, the auctions have been the significantly dominant source of carbon removals, at least by volume available in a given year. The 2024 auctions did not fully sell out, and the 2023, I think, from memory, completely failed to sell. So they're not always the main source of supply. But in upcoming years, even were they to sell out, unless you include the cost containment reserve, which is up in the sort of hundreds of dollars price point, they're actually a very small factor in total supply, which means that they're less of a driver of the carbon price than they used to be. So we're sort of, for 2025, estimated total aggregate removals or supply is around about 28 million tonnes. On the demand side, over on the right, we have liquid fossil fuels, stationary energy, and industrial processes. These are things like coal power or gas power or steel production, and then waste and synthetic gases. And we also have the sort of flip side of forestry, which is when you get an emission from forestry, which is when you harvest the trees. And these are forecast to generate 42 million tonnes of demand. So there's a big difference here, which MFE helpfully calculates. There's 14 million tonnes more demand than there is supply, which there's also an excellent chart of how that's sort of going to trend over time. But these are all based on forecasts and assumptions. And if you look at that, you'd probably be wondering, how on earth is that ever going to work? There's clearly not enough units going around, even if the auction does clear, unless we maybe we'd get close if we hit the cost containment reserves. But there's no way this can work. The price is going to go through the roof because there'll be a massive supply shortage. Unfortunately, we prepared a lot of units earlier, and they're sitting there in what's called the stockpile. And that stockpile at the moment is about 157 million units high. And to put that into some context, we've got 51 million units of aggregate total demand forecast in 2025. And if we just look at the net demand, including the units being sold through auction, is about 16 million tonnes. So the stockpile of units that have accrued through one thing and another over the past, looking back through the unit transaction summary to 2007, is vastly more than the total annual demand, and especially even more than the total annual net demand. There's a lot of things around which can show you sort of the composition of the stockpile and how it's trended over time, and we've pulled some of that together. This is from the EPA, and just to sort of explain through that, participants are people who are registered in the ETS. They'll usually be, I think this is usually, actually I can't remember this well enough to say it off the top of my head. I'm pretty sure participants are someone who has registered. Either they've got a surrender obligation or they're registered for forestry. Received NZUs are people, usually, as you can see from the distribution, that did not register but did receive NZUs anyway. So usually that's a pre-1990 forestry entitlement recipient, but there may be others, as noted out here. Other, I honestly can't remember, so I'm not going to try and say it off the top of my head, and then clearly the total. NZU AUC are units that have been made available through the auction mechanism. NZU FA is units that come from pre-90 forestry. These ones here are all post-1989 forestry, and then other NZUs are, from memory, things like industrial allocations, or I'm not actually sure about what other greenhouse gases get. But again, I won't speculate. And the EPA produces these sort of summaries of holdings. So these are, critically important, these are privately held units. So this isn't the government's units that they have one way or another. It's units that are in the hands of people who, one way or another, are ETS participants and could choose to transact those units depending on some combination of their wishes and their obligations. And the EPA publishes an update of this, which is basically a snapshot of the status every 3 months, at least in recent years. More further back, it was sort of every 12 months or so. If we look a long way back in time, we can see that the stockpile hasn't really reduced a lot in the past, certainly not in the past 2 years, and prior to that, it's actually been fairly steady and then increased. And there's been a lot of column inches written around how it's going to fall, and there's going to be a massive shortage of supply, and we're going to use up the remainder, and the price is going to go through the roof. But it's especially important to note that in these sort of period through here, to some degree, this was the unit stockpile not really falling, despite the fact that from memory, 2023, the auctions didn't sell any units at all, and in 2024 they sold only a small fraction of the available units. So we still had these other sources of supply, which makes it seem like there's an enormous volume of units available. You can, and also not that much change annually in that volume. You can look back through time in the sort of how much it's changing on a quarter by quarter basis from this data from the EPA, although this chart's one we created. And there's a little bit, if you're familiar with the ETS, you can sort of read the story of what's going on here. So these big negative spikes that you see once a year, that's because at the end of March, that's when annual surrenders are due. So if you're a big oil company or power company that's emitting a lot of CO2 or using a lot of coal, you have to finalize your returns at the end of March. And generally, they do wait until literally the end of March, which is why you see the sort of drawdown on the stockpile appears in the end of June result, because at the end of March, they're still there. Then they get taken out at the last minute, and in the end of June, they're removed. In the first sort of March and June returns, you'll also see some sort of upticks due to the forestry returns coming in. So this is particularly clear in 2024 when the first two auctions didn't go through. So pretty much all of this, or at least most of it, will be forestry. And forestry is also the reason that the drop here isn't as dramatic as it otherwise might have been, because there's something like 35 million tonnes worth of surrenders, but you've also got a lot of new units coming in. And then in recent years, you don't actually see a lot of action in September, December. This is because the auctions aren't clearing. If we look back into March 2022, there was a huge amount of units in that period because that auction sold out, including most of the cost containment reserve. And then the two auctions in the remainder of the year also sold out. 2023, not so much. So it's important to note that this 157 megatons is a very large amount when you consider it in terms of what the annual net difference between supply and demand is expected to be. And the $8.64 billion question, which is 157 point something tons at, I forget what price I used, I think it was $54. How much of that is actually available to the market? Like, could this be used by the market? Might it be sold on the market today? If you flip that around, oh no, sorry, that is what is the surplus? And you might sort of be going, isn't it all surplus? It's all units that's sitting there held by private actors, that all of it is available to the market, which is true and untrue. The usual analysis of the sort of non-surplus amount assumes that some fraction of these units are held in reserve for some other purpose and that they're relatively inelastic in response to price. So even if the price goes up by $10, those people still might not sell because they need them for something else. Although certainly all of the analysis I've seen does acknowledge that the private actor behavior will be responsive to the price. And if the price goes up, then you would expect more people to sell. So yeah, these units are treated as less likely in general to be released to the market than the surplus units. So an extra disclaimer here, just because everybody loves those. Quite a bit of what sort of the unit volumes in the following is from analysis that was either from or commissioned by MFE. It's not analysis that we've done. We haven't assessed the assumptions in it or the conclusions from it in any detail, and so we're not saying that it's either correct or incorrect. It's just what's available. I do have a couple of opinions on it, which I've sort of added as commentary. I'll try and differentiate between what's my opinion and what was in the source data. But again, if you're wondering, go and read the source data and then you'll see what's there. And it's also worth noting that, like, certainly the ministries behind this work have spent a lot more time on this topic than we have. We may well be wrong. So just take our interpretations with a grain of salt. So the three identified categories of these sort of non-surplus units, units that people are holding for some other reason that they might not want to sell. A lot of them are units that are held to meet future P89 harvest liabilities. So if you've got a forest that's registered in the ETS and you've received units for it and you cut it down, then depending on the registration framework, you have to give some of those units back. And you might not, if you don't hold those units in reserve, then the amount that you have to give back, you have to go out to the secondary market and buy those units at that time, and it might cost you a lot of money. So people might choose to just not take the risk and hold on to the units instead. There's also a fraction that are unsold pre-1990 units. So these are units that people with forest that was already, falls into the pre-1990 category. I won't get into the details of what that requires. I think was established in exotic species at 2008, which is I won't try and unpack all of that. But these units were sort of, you get to keep them even if you harvest the forest, but though you have a separate obligation and a much larger liability if you don't re-establish the forest. But there are quite a few of them that haven't been sold, and the metric used here is, have they been even transferred out of their original counts? If not, then they're included in the sort of the unavailable category. And then finally, there's an allocation to units that are held by big emitters to hedge against sort of future changes. So if you know that you're going to have an emissions a surrender obligation in March of 2026 now, you probably don't just want to leave it until the last minute and then go and try and buy 10 million units at whatever the price might be in March of 2026. You'll want to be sort of building up a portfolio over time so that you don't face any undue price risk. And if we sort of stack those together, coming up to our 157 million, whatever it is, tons from earlier on, we see that the P89 units are the bulk of that fraction. These are, again, the numbers from the MFE commissioned analysis. Hedged unit quantity, which is a bit smaller, and then the P90 units are really just a fairly small fraction, I think 7 million or so on the top of that. This is all for the central case. Under that central case, there's sort of 52.4 million tons of surplus units, which are available to the market. And then there's a sort of a higher and a lower around that, which are roughly as indicated. And if you want to know the details, go and read the reports. My take on it is that it's the P89 units which are really the massive unknown amount. I think it's unlikely to be more than what's estimated that's unavailable. With certain changes, though, it could very much be less than what's estimated, and possibly that's part of what we're seeing at the moment. For the P90 units, I am skeptical about treating those as though they're unavailable to the market on any meaningful time frame. Our general experience has been that lack of awareness is the main obstacle with these holdings, that we occasionally encounter people who have tens or hundreds of thousands of dollars worth of P90 units that they literally didn't know they had. And once they know they have them, they're often quite inclined to sell them potentially very quickly. So, I mean, this is acknowledged in the MFE analysis. They're sort of assuming a certain drawdown of that volume over time. I think there's a lot of uncertainty in that estimate almost by necessity. It could be that whole volume just stays there, sitting with people unaware of it. It could be that there's some new way identified to engage those people, and that it all comes to market quite quickly. There's high uncertainty. And finally, on the hedging units, I feel like counting these as though they're unavailable is a little bit like sort of borrowing demand from the future and hoping. I mean, it's all going to come to market eventually. Let's say that you're a big oil company and you've got a 10 million unit portfolio for hedging, but you know that over time you're going to transition to fully synthetic fuel. You won't need any units for hedging anymore, and so you'd gradually erode away that amount. But the time frame over which that happens is probably quite long. I think it's reasonable to assume, at least in the short term, that there's the volumes as they've calculated them. And certainly, I've never discussed the hedging strategy with a major emitter, and I suspect MFE and those I've worked with have. So let's say that there's 67 million unsafe P89 units, which is this amount of sort of the forestry issued units that the theory is that people aren't going to sell because they need them. Is that a lot? Yes, it is. Like, there's 108 million in total within this P89. This is the sort of unsafe units that are going to be held onto. It's the majority of the stockpile, like close to 70-ish%, eyeballing that. And the majority of that is P89 units. And even if you look at the distribution of holdings here, so you could kind of say that it's relatively unlikely that auction units are going to be bought by entities other than emitters or speculators. There's sort of, in your head, I'm not saying these are the exact mappings, but you could say the hedged units correspond to the auction units. The P90 units correspond to the NZFA units, although note that most of the 7 million here, those are those who've received the units and aren't participants. Quite a few of these units may be held for hedging purposes or future sale purposes or whatever by other parties. And then there's a pretty close correspondence between this 67 million of P89 held in reserve units and the total of 74 million NZFE and basically post-89 forestry units that existed as of 31st December. The number's gone up by about 6 million now, but this analysis was released late last year. And then this sort of in the 20 million over here, this could just basically think of that as it's not allocated, it's very much available to the market. If for some reason a larger fraction of that 67 million of post-89 units of unsafe units than expected becomes available to the market, so for example, people decide that that they are actually safe or that they want to sell them despite them being unsafe, then that increases the supply, and at the margin that's going to suppress prices. So this is sort of what's hypothesized may be happening at the moment with the market. So questions that arise from this: what is safe carbon? when might unsafe carbon become safe, and when might unsafe carbon be sold despite being unsafe. So safe carbon it's not like a technical term, it's almost like an analytical aid to understanding what's going on with your forest. And it's the fraction of the carbon removals that have been issued for a forest that you can sell while retaining enough carbon to meet whatever your future expected liabilities are, which is going to be based on how your forest is managed over time. So this depends on the registration scheme that your forest is registered under. It depends on the timing of your registration versus the forest cycle, like when did you register versus when you planted the forest and what was the history of the forest at the time that you planted it. It depends an enormous amount on your future plans for the forest, and those plans might change with the change in the carbon price or the log price. So now we're going to go through a bunch of scenarios. Because time is always ticking by, I will go reasonably quickly. I'll try and talk slowly enough that it's comprehensible if you want to watch the video later on. But and first, just a little bit of a caveat. I haven't been especially careful with the exact timelines on these forests, like the age of the forest to within the year or the surrender obligations within the year, because I was trying to put these graphs together reasonably quickly. If you are going to take any action on this, we'd have to do a forest-specific analysis, but it's broadly correct and it certainly captures the general dynamics. So there's two parts to this graph. One is the overall balance of units that you would have, assuming a certain forest type, forest registration methodology and registration timing. That's the blue line. And then the red bars are the number of units that you receive if it's above the zero, or have to surrender if it's below zero in any given year. So in this case, we've got a forest that was established at year zero. Pine trees, I think I chose pine and Gisborne region, and they grow very slowly to begin with, but then you can see sort of around year 3, year 4, it suddenly starts kicking off and grows and grows and grows and grows and grows until at year 30 you decide to harvest it. And the way it works is that at the time of harvest, the carbon stock and your surrender obligations are equal to the stock pre-harvest minus the residual stock, which is like how much carbon's left there and the bits and pieces of trees on the ground that aren't harvested away, or the tree roots or whatever. And then that steadily declines at 10% per year over the next 10 years until you get to zero. So if this is your forest and this is your forest management plan, your safe carbon is zero. You will need all of the carbon that you receive, even despite registering right at age zero, you'll have to give it all back again. Oddly enough, there may still have been reasons to do this, to register, even if you did ultimately do this. But I would say if you knew for sure that you were going to do this, then it wouldn't have made any sense to register in the ETS. It's just going to be a whole bunch of cost and you have to give all the money back, unless you really have a longer term perspective and you've got some plans out here. But this is not how most people manage their forest. Let's say instead that we still are under the stock change methodology. You still registered it as soon as you put the trees in the ground, but you're planning more than one rotation. So we've got this first rotation, but then there's sort of a second one that you plant a year after you do the harvest, which is pretty common. And these get added together. So they're sort of superimposed on top of each other, which I've done here just to illustrate it. But combining the two charts, it actually looks like this. You can see that the overall balance now, it sort of still falls when you cut the trees down, and then it begins to fall away still in the years to come, but it begins to trail off. And then before it gets anything like zero, it turns around and starts going up again because you've got this new forest going through, and that's contributing to the total carbon stock and hence the annual change in stock as well. And under this, with the sort of rough assumptions I had, you've got some safe carbon, 143 tons. And it's important to note, you could have sold that 143 tons in anticipation way back when the forest was 8 or 9 years old. It's just that the remainder of it you're keeping in reserve and planning to surrender it later on. You don't have to wait until this point to sell it. But we can do a lot better than that. So let's say that we've got, oh, sorry, no, this one isn't better. This is worse. Here we're assuming that you that you registered the forest right from day dot. It's actually pretty hard to have done that at the moment with the current forest cycles, because if you're harvesting your forest now, it's probably around 30 years old. And that means that it was planted in about 1995. You couldn't register your forest in the ETS in 1995, and you can't claim the units of removals for your forest back to the start of time. So let's say instead that you delayed your registration, you didn't get it registered until the forest was about 10 years old. So you only start receiving carbon at year 10. Now you're back to having no safe carbon again because you only received a subset of the units. You have to give them all back fairly shortly after harvest, and you run out. Though again, it could be that this was still worthwhile for some time value of carbon or leasing, or that you were blending it with other forests or some sort of thing like that. There's a lot of ways that you can combine different carbon sources to still produce some benefit. And one of the extreme versions of that is like, let's say that we not only had the subsequent rotation of forests, but we had two forests which were slightly offset in their rotations and are also planning to have subsequent rotations. And here I'm choosing the scenario where they're almost ideally offset. But if you're a large forestry company, you've probably got so many forests that you can interleave them all to get pretty close to the optimal relationship between the forests that are growing and your forests that have been harvested. And if we combine all of that together, I mean, you can see here that my playing somewhat fast and loose with the ages of the forest has led to a little bit of an inconsistency. We get a much higher average carbon level. And I think the value used in, well, first to note here, this forest is now twice as big as it was before. So where here it looks like 650 or 700, it's actually per nominal hectare of forest 350-ish. And this is very much an approximate figure. It depends on the average rotation length, on the species, on the region, on whether you're under the FMA or under the default tables. But the sort of rough dynamics are captured here. And finally, as of the start of 2023, there's the new averaging category, which means that for landowners who effectively, it's if you had a first rotation forest that was below the average age, which for radiata is 16 years, as of the sort of 1st of January 2023, you could elect to move it over into the average counting method rather than the stock change method. And that means that it doesn't matter how many forests you've got, you don't have to surrender any carbon when you harvest it, as long as you replant it again. And if you don't replant it, you have to give all of the carbon you receive back. And this means that the safe carbon could basically, the average even single rotation forest owner ends up in a fairly similar situation to very large production forestry companies that can carefully interleave things. They get to keep effectively the average standing carbon stock for their management regime, assuming that they started claiming it early enough. So safe carbon's pretty complicated. Whether it's safe or not depends a lot on what you plan to do. And that means that you can change the safe carbon depending on either the management that you're undertaking or the management that you plan to undertake, because sometimes you're selling safe carbon based on an anticipated future liability. And one of the most dramatic things that can change the safe carbon is a change in decision from I'm going to harvest my forest to bugger that for a game of skittles, the log price is terrible, this land's too difficult to access, harvest is going to be uneconomic. I'm going to just change this over to permanent forestry. I'm not going to harvest it. I'm going to manage it as basically retire the land in the forest, at least for now. And if you did that let's say your forest was about 24 years old and you just decided that it was a lost cause. You don't have to, obviously if you've harvested it, you can't then decide to unharvest it. But at any point pre-harvest, you could be sitting there going, well, at the moment, I'm going to have to replant it and I've only got 143 tons of safe carbon. If I decide to not replant it and not harvest it, I've actually suddenly got 600 tons of safe carbon, which, the delta there, 450 tons at current prices is worth, what's that? 400 times 50 is $20,000 for $24,000-ish. Yeah, I think 22. It's a lot of money in any case compared to typical log prices, and you keep on earning year after year for that as well. Like there are risks with this approach. You're making a bet on the carbon market. You're making a bet on whether your forest gets blown over by the wind shortly after, where there's some protections against that for surrender liabilities if it's an accidental event, and then you could get you don't have an obligation to repay the units as a temporary adverse event waiver that you can fill out, but it still means that you don't earn any carbon for a long time and you have to replant the forest. So I'm not saying that this is the obvious answer, but it's certainly a possible pathway, and it is certainly a pathway that we have customers who've taken this. They've got to this point and gone like, this is not going to be a goer. I'm going to take the carbon. And suddenly the safe carbon has quadrupled in this case, and it's even roughly doubled versus the default case. And it just keeps going up and up year after year at the rate of 30 to 40 tons a year. Even if you just delayed your registration, like you might be thinking to yourself, why on earth would somebody bother registering in the ETS in the first place if they thought they might cut their forest down? The answer is that it buys them optionality. Like you now have another possible pathway that involves not cutting your forest down and can be quite lucrative, rather than just like being locked into harvesting it and having to take whatever the prices might be at or around the time that your forest becomes ready for harvest. So similarly here, the amount of safe carbon that you have with this delayed registration, it could suddenly go from 0 to 400, which again, I could try and do the maths better. 400 at $50 a ton, that is $20,000 a hectare. So why on earth would anybody do this? I've sort of covered this to some degree already. To not harvest your trees when your trees are worth money. Your land use intentions might change for that area. You might decide that to harvest in rotational forestry is a bad idea. Choosing not to harvest because of the carbon available value, it can give you money now, and it can even give you more money over time. MPI commissioned a bunch of very useful work back in about April 2021, which was then very helpfully proactively released. And it gives an indication of stumpage values over sort of a range of scenarios and regions in New Zealand. And stumpage is basically, at least as I understand it, please do check with a true forestry expert, but it's the amount of money that someone would pay you for the rights to harvest your trees. You don't have to worry about getting the trees out. You don't have to worry about cutting them down. You don't have to worry about the log price, although obviously all of those things are going to have a huge influence on what they're prepared to pay for stumpage. But it's a pretty good proxy for how much your tree is going to be worth net of all of the costs of realizing the value of your trees for timber. And you can see here that if we look at the average and the median, there's only a couple of regions where it was above $30,000 a ton. And by a couple, I mean two, Bay of Plenty and Gisborne. Every other region, the average and the median was less than 30,000. And even the 75th percentile was sort of rarely over 40. But I mean, review this at your leisure later on. But worth noting that at $30,000 a hectare and $60 a ton of CO2, granted we're a bit below that now, $50 a ton would be 600 tons, but that's only 500 tons of CO2 equivalent, which is a hell of a lot less than you might have potentially received for a mature radiata or similar forest. So you might well look at that. And I want to stress this is a very simplistic economic analysis, but it's not unreasonable. If you're harvesting a hectare, you might get $30,000 in stumpage. You might have to forfeit $30,000 in NZUs, though, if you've saved all of those NZUs up. But you can plant and eventually harvest another forest, which will be worth money, and you can sort of figure out the discounted value of that. If you don't harvest the hectare, you don't get any money at all for the harvest, so you've sort of given up that value. But you can now sell the $30,000 worth of CO2 that you might have sitting there, and obviously this will depend on when you registered it. It could be a lot more than that, could be less, and that will inform your decision of whether to harvest or not. You don't need to pay to replant. I missed out a T. And also, the very next year, you get another $1,300 on because your forest is continuing to grow, assuming the carbon market stays roughly as it is. But eventually, your forest is going to get mature, and you don't get another forest, though in principle, at least, you could start doing some sort of continuous canopy selective harvest, which roughly maintains the carbon stock and doesn't give you much of a carbon liability, but it's more expensive to do that. So how common might that change in behavior from sort of, we're talking about, is the amount of safe carbon likely to be much higher? Does that mean that much more of the carbon stockpile is actually available to the market? The main thing that's going to make safe carbon higher is people going, actually, you know what? I don't have to worry about my harvest liability because I'm not going to harvest my forest. So the analysis that's been done assumes that it is very rare, that 80%, that there's an 80% harvest rate, basically. Only 20% of forest is unharvested. It's worth noting that permanent forest registrants are pre-committing effectively to not harvest. There are a whole bunch of obligations that mean that you can't clear permanent forest land. Quite a lot of that's probably native forest, but certainly there are areas of forest being registered under the permanent category that are not native, and those won't be harvested. And standard forestry participants, whether they're under stock change or averaging, they can change their mind at any time to basically not harvest, and they'll usually respond to the market, and in particular the log prices and the carbon prices. So I think that assuming an 80% harvest rate, especially given recent years' carbon prices, is not conservative. I think it could lead to an overestimate in the sort of non-safe amount, and that could lead to a larger amount of unit supply available than was expected in the models. But there are a lot of factors that inform this, and we haven't done enough analysis to have a strong opinion. Part of the reason that we haven't done a huge amount of analysis is that as an individual, there's not actually a lot you can do to change this broader situation. And we really are just sort of, we provide support to a whole bunch of individuals. You just have to decide what you think might happen to the market and what that means for what you want to do with your forest. And it's completely up to you. And it's often a function of what you see in the relatively short term and what options and what money you have on the table right now. So if you're asking, is my carbon safe? It's very much one of those usual consultant answers of, it depends. It mostly depends on what your plans are and your current status. If you don't have any carbon because you didn't register your forest, you can be pretty clear you don't have any safe carbon. If you have a large amount of carbon because you registered your forest a long time ago, and it's all forest that you plan to manage as permanent forest and you have no intentions of harvesting it, probably it's all safe. But you need to consider these scenarios. And if you want help, that's what we're for. Come and talk to us about it. All right, that was a marathon. Thank you very much for your time and your interest. I hope that was helpful. And yeah, if you do have any further questions, just follow up with us and we'll take a look at them. Thanks a lot.